Good day everyone, Alice here from Sophie Financial Network. Today is June 19, 2022. Happy Father's Day. And in this video I'm going to talk about the S&P 500. As you know, tomorrow market will be closed due to Independence Day in US and the stock market will be closed. This is just a future market which is going to be closed probably around just in 2 hours or so. Okay, so here's the monthly chart for S&P 500. As usual, we are starting from monthly chart. Stochastic still, the fast line goes to oversold condition, which is pretty good signal for the dead cat bounce. I would say probably we will have maximum. We would have 1 month or 1 month and a half rally, but for the short term, I would just give a benefit of doubt to 2 weeks rally, but this is going to be the maximum rally that I'm expecting. We will get to the levels in smaller time frame, but right now, as far as we are below this SMA 20, this is a downtrend, and any rally would be sold by institutional retail traders even. So we are definitely in a bear market, and there is no doubt about it. Some people just waking up last week or so and say we are in bear market. So we are in bear market since January, so there is no doubt about it. Don't worry about the 20%. That's a stupid number which fools lots of people, and this is what happened when this market just retracing all the way down. Some people are saying, okay, we are at the bear market, but bear market just has been started since January 2022. And right now, I'm just looking for more downside in the longer term to 32, 83, 3500. That is going to be solid area. SMA 50 with this demand area. Monthly consolidation, so that would be great area for a solid bounce. For now, because we are just between these two SMA 50 and SMA 20, so we are kind of in the middle of the sky, so we are in nowhere, and any bounce which is normal during bear market, we will have solid bounce, would be sold by institution. Okay, so go to weekly chart. Weekly chart is kind of like a different, and as you see here, we are getting into this nice area. And last week, just market gap down. Let me just clean this chart a bit. This is pretty, yeah. Okay, last week, let me just clean this one as well. Right now, I don't believe we are getting to that level. Last week, we just had a gap down, going all the way down to here to this area, as I pointed out. And I expected price just retracing this level and coming back up. So we nailed it, I believe. And this is the level 36. I believe last week I told you 36.88 or 36.90. That would be a good level for buy. So we are into position. Two of our targets in NASDAQ, which is NDX, just hit the target. I'm looking for more upside, to be honest, this week, especially going through to July 1st. That long weekend in July, in early July, that would be, I think, the maximum upside target for the market. And after July to September, market will be into consolidation, choppy between 41.25 and even lower to 3,500. So that would be very, very wide range consolidation in weekly chart. However, we are breaking through SMA 50 and we just close below this. This is not a good sign, and the next level would be here 3,500, and 3,500, to be honest, is very, very important level. I'm looking for even more downside to 33 and 3,400. This is the area that I'm looking for. As you see here, this is a very, very strong trend line. If you just this is 2011. And just connecting this dot to 2018, going all the way up. And this is the last I would say, the last chance for the market to hold itself, at least for a strong solid bounce to this area, which is going to be, I would say, 20 to 25% bounce. Not a bad for bulls or for those ones who wants to get out of the market before a nice sell-off is coming. I believe after October, September, that would be very, very massive downside, and I'm talking about that later on when we are getting closer to that time period. But I believe we are into a 6 months to 1 year bear market. 6 months has been passed, another 6 months is coming, and the downside target is very, very scary. So I don't want to say that right now we are going to see that one and analyze that one weekly as we are going through. But this week, for the next 2 weeks, I would say market is in oversold condition. As you see here, we are stochastic wise, RSI wise, MACD wise, everything we are at oversold condition. Sentiment is very bearish, so market is due for a solid bounce, and I would say solid bounce by above 4,000. So I would give you the maximum target for me for now for the next 2 weeks would be 41.54, somewhere around this area, just a little bit higher or lower, somewhere around 4,000 to 4,200. That would be the maximum target, I would say, for the last chance for those ones who want to get out of the market before a severe correction or sell-off is coming next 3 to 4 months. Okay, so if you go to daily chart, let's go to the daily chart, see where are we at. Here's the daily chart, and I just told you exactly how did I find out to set up a long position for NASDAQ. This is S&P 500. Any way that you want to slice it and dice it, we are in clear downtrend, and these two boxes are going to be my upside target for the next 2 weeks. So I believe market is kind of bottoming as intermediate bottom. This is a nice divergence between these two lows, May low and June low, and I think market doesn't have enough momentum to go downside before going up. So market needs to go up all the way, at least to regain the energy for another sharp sell-off. And I think these are two good levels. So above 4,000 to 4,100, maximum 4,200. I'm not sure even if you're getting to this consolidation, to be honest. This consolidation was sold by lots of institution, and I remember I told you this consolidation is going to fail. And one I just saw analysis that this is a nice consolidation going higher, but no, this consolidation was about to fail. I warned you, and look what happened after that, just going like a hard and very hot knife through the butter, going all the way down, take out this pivot low, and now we are going back up again to 4,000 to 4,100. These two levels are very, very good levels for put option, at least if you want to hedge yourself or if you want to get out of the market. So these are two good levels for getting out of the market. Early July, late June, that would be the time frame that I'm looking for. So for the next 2 weeks, I would say market will have another relief rally. This is a relief rally within a weekly and a higher time frame downtrend. So as you see here, stochastic is in oversold condition, nicely coming back up. These two dojis are giving us a bull signal. Also RSI wise, I just pointed out for myself here, this is the area that I was looking for long, and RSI reacted. Not the type that I want to see. I would like to see RSI just bounce back up above this trend line, but it just went through choppy, just as you see here, just it is very, very choppy in this trend line, but it doesn't go through all the way to the oversold condition, which is a good sign. And also MACD is in oversold condition, sloping up a bit, but most likely I just look at the price action, I just give more strength to the price action, and this doji plus this confirmation for now. As I said, market will be closed tomorrow, so I don't pay attention to this, but I would say market is coming back up to 4,000 to 4,200, and let's give a benefit of doubt to this upside bias. But after that, I'm just telling you, market is getting ready for sharp sell-off, probably to 30, this area. This is the box that I'm looking for, 34, which is 35 to 35.80. And also, even if it stretched down 3,300, that would be very, very fair possibility for the downside target. Okay, so if you like this video, please give us thumbs up, smash the like button, subscribe to our channel, and I will see you on the chart next week. Have a fantastic week. See you on the chart. Bye-bye.